Hey, podcast listeners. Welcome back to the Retire Young podcast. Don't forget to subscribe to the Retire Young podcast on Apple Podcast, iHeartRadio, and Spotify. If you're just tuning in, Al was shedding some light on, Al was flirting with finances because so many people they're technically flirting with their finances, and sometimes it could be good ways, but a lot of time it's in a bad way because people are investing without education, and that's why it's so important to get in these investing classes so you have more financial literacy and things that you can take advantage of in these financial markets. And Al, you kind of ended that last segment. You got into IRAs a little bit. We talked about the 401k. Really, the 401k, in my opinion, has really taught people how to save, and that's about it. Because we know there's a retirement crisis. There's facts about that. There's a lot of articles talked about that. I mean, people can't retire, and if they do, they don't have enough, and that's unfortunate in this country. And with IRAs, you're seeing a lot of people want to be able to manage their own retirement. Because, I mean, think about this. If you have a stranger, like a broker or an advisor or a money manager, whatever you want to call them, a lot of times it's a stranger. And do you think that they have your best interest? So when you self-direct your own accounts, you may have your best interest. You can potentially put yourself in funds that could benefit you the most as an investor. Now, what are you helping people with right now, especially if people that want to self-direct their own accounts? I mean, and also first, before you do that, explain what the difference between the Roth and the traditional is, and why people want to participate in those type of accounts.
Yeah, before I mention that, I just want to get back to 401ks for a minute, because we say some negative things, or what seems like negative things about a 401k. You hit on one of the big advantages, is it really has kind of forced people to save, to put something aside for retirement. The other benefit with most of these employer-sponsored retirement plans is that there is a match. So if your employer is giving you a match, that's free money. I mean, that's money you have to take. So, we don't mean to say that 401ks are not, there's no value. There is.
Well, hey, Al, what's happening now, though? A lot of companies are dropping that match right now.
Well, that's what I was getting at here. Now, a lot of companies have either temporarily, or, we don't know if it's temporary or not. Or they're either dropping them altogether or maybe cutting back. So that's something to consider. But if you are looking at a way of maybe having more control over what you have in retirement, an IRA, traditional IRA, or a Roth IRA maybe is something to think about. And you can do these in conjunction with a 401k too. It's not the one to the exclusion of another. With a traditional IRA, you're putting money in there that is pre-tax money. So it's not taxed, goes into that retirement account. It's tax deferred, as is the growth of the assets. But when you retire, when you take money out, it is taxed at your ordinary income tax rate. And that's all the money that comes out is taxed. A Roth IRA, on the other hand, the contributions are after-tax contributions. So you've already paid the tax. All of the growth within that account comes out tax-free. So if you have the opportunity to set up a Roth, the earlier you do that, the greater the growth of the assets that are in there is, and it all comes out tax-free. So that's a great benefit. And now there are some Roth 401ks too. There's a number of different, newer type of retirement accounts. I guess it depends on what you are in, what you have access to. But these are the things that we go over in our classes is how to do what we call a dynamic 401k management, how to get better management, potentially better returns from your retirement accounts. The value in having a self-directed retirement account, whether it is a traditional or a Roth IRA, is that, number one, you don't have the fees that you're paying to your plan sponsor. You will probably, this is the case with most of our students, once they have gone through our classes and they've listened to the differences between the different types of investments, typically they don't choose mutual funds. And actually, most of the students that come in that knew only about stock end up wanting to trade something different than stock. And what we're talking about are the leveraged assets like options, futures, and Forex. And one of the reasons is that stock investing has gotten very expensive over the years. If you just look at the S&P 500, the top 10 companies in the S&P 500 are all over $100 a share. And the average price of all the components is above $130 a share. Used to be when companies got up to that point where they were around $100, they would split. But that's not the case. 20 years ago, the average price was $40. So it's getting to be more expensive to trade stocks, individual stocks. So that's what these leverage assets give you the opportunity to do.
And just think of the opportunity as an investor. What is the opportunity for you or the typical investor if you lowered your fees? Or maybe you eliminated those fees. Well, if you self-direct that, you can do that. You don't have those mutual fund fees where there's, like you said earlier, I believe in the second segment, the load fees, the front-end load fees, back-end load fees, admin fees, legal fees. There's so many fees, and I believe, to my knowledge, a lot of that doesn't have to be exposed or disclosed. Now, with the opportunity of doing things yourself, so many people I talk to a lot of people and they say, I don't want to manage my 401k or my IRAs. Well, of course you don't, but you got to get educated. Once you're educated.
They're already doing it in their 401ks or their employer-sponsored plans. They are actually already managing their own assets.
Yep.
And then they're paying somebody else for the right for them to trade their own assets.
That's the truth there. But so you have to be educated to make better decisions in your accounts. Now, Al, when people are managing their IRAs, is it the typical buy and hold what people are doing, or what do you think as an investor? What are good options? And I'm giving you a little hint there. What are different options people have when you self-direct?
Well, you have many more options, options being one of them.
That's one of those O words. It's normally a C word.
Yeah. Well, yeah, confidence, comfort, choice, courage. Those are the C words we use. But yeah, you can choose. You can trade these leveraged assets like options in your IRAs. You can trade futures contracts, and with futures, what we're talking about is that's investing in something that you believe either is going to go up or down in the future, just like it says. We're talking about all the major stock markets. We're talking about commodities, sugar, corn. You can trade oil, gold, silver, currencies, interest rates, a number of different assets that you have available there. The great thing about that is that most of them are not correlated to each other. So if you're looking for diversification, futures is probably the best diversification asset that you can use. Some people will choose Forex, the foreign exchange market, where you're looking at the difference in exchange rates between two different currencies. One great benefit to both of those is that they trade virtually 24 hours a day. So you have 24 hours that you can devote to this as opposed to 6.5 hours. And I don't mean to say you should be spending 24 hours doing this, but you have that time period within which to put a little bit of time into putting something together or managing the assets or the trades that you have on. With the options, and all options, it's a derivative. What you're doing is you are trading on an underlying asset, and with all of these, the underlying asset really is what determines the price.
I want to talk a little something about here is opportunity. And so many people, and we're conditioned from a young age to think about things. And I want to talk about opportunity because the market doesn't wait. There's a lot of opportunities in these financial markets. I mean, quite frankly, there's opportunities every day once you understand the techniques and the concepts and the things that you can do to participate in these markets. Now, with people being kind of stuck at home probably more than ever right now is that time to take that opportunity to learn a new skill. I mean, the markets are a great thing. We have up and down markets. That's phenomenal. It doesn't matter what this market does. You just want it to move. We have a lot more to discuss here, Al. You mentioned something about the Forex market and the futures market. We haven't really dissected those at all. I want to get into those different markets as far as the buying power that you have, how phenomenal that can be in your accounts. Thanks for listening. Don't forget to check out the website at retireyoungaudio.com and leave us a comment.